Business news now with Ed Boyd. He joins us live. Ed, retail sales figures for May, they come out today. Economists expecting retail try to fall by about 1%.
Yeah, a little dip expected for retail sales, Pete. Remember, last month was a record, roughly $34 billion spent in retail shops around the country. We're going to start to see the impact of inflation on retail sales. So Aussies may be choosing now to not buy such expensive items anymore. The obvious example is the $10 lettuce. People might be starting to turn away from those things, slowly bringing down retail turnover. But next month's expected to be a big one though, Pete, because it's end of financial year sales. The month we're in June. So sales to dip in May, pick up again in June.
Okay, on Friday, REA Group will release its monthly property price index. House prices expected to keep on falling in Sydney and Melbourne, are they, Ed?
That's right. Look, property prices down 0.3% last month for Sydney and about 0.3% in Melbourne last month. They're expected to continue on that downward track. We know the property market is getting a bit overcooked at the moment. There are plenty of vendors out there that are asking too much money for their houses, and we've seen auction clearance rates hovering just above 50%. So their auction clearance rates are plunging. Buyers are being much more choosy with what they want to buy, and they're being more careful with their spending because they know interest rates are higher and they can't borrow as much money as they did before. So this is a trend we're going to see throughout the rest of the year, Pete, with property prices. Eventually it's going to hit the rest of the country. Right now it's really focused on Sydney and Melbourne, those declines.
Okay, Michael Burry, the investor who predicted the GFC in 2008, featured in a movie, or somewhat featured in a movie a few years ago. Good film too, Ed. He's issued a warning for the retail sector.
He has. Look, he's calling it the bullwhip effect. And basically what it is where a retailer runs out of stock of a certain item. They decide to order a whole bunch more from their suppliers. Their suppliers then order a lot more stock from the manufacturers. It gets back onto shelves and it ends up not selling. And we're now starting to see a lot of retailers around the world, particularly in the US, having way too much stock on their shelves, and it's costing them money. So an example really quickly from Target in the US is if you bought a clothing item from Target online it doesn't fit you, they actually don't bother returning it anymore. They say, look, you can just keep the item. We've got too much space in our warehouse. We can't fill it up. It's too full. So this is a thing we're starting to see in America, and it's going to start getting to Australia too.
Okay, Ed Boyd, thank you.